So traders, a huge reversal today in the markets. I'm going to share with you exactly what this means, what I see coming when it comes to the Dow Jones, the S&P, Nasdaq. I'm also going to be looking at gold and silver in this video, and I've got a really interesting pattern that I want to share with you when it comes to gold. Wait to see that. Oh my goodness. And also there's something going on with the gold mining stocks right now, which we have been getting a sell-off, but there's something really interesting. I just can't wait to share that with you. I'm really excited to share that with you. So anyway, guys, let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders. So let's get straight into the markets today. Now, one big thing I was mentioning yesterday, and man, you bumblebees went crazy. Right? It's like, oh my goodness, the market drops a few percent and we had a big down day. And I know for sure, yesterday people would have been freaking out, and you still have those bumblebees. Now I call them bumblebees because they're always calling the tops in the markets. They're always freaking out. They're always emotional about the stock market, which all that sort of stuff is a recipe for disaster. Calling tops in the markets. Why would you do that when 80% of the time it's going to, if the market's in an upward trend, it's likely to continue, especially if it's breaking new highs. And then, let's actually pick a top in the markets. Harry dead. Right? And emotional. You can't be emotional about this sort of stuff. And I know if you're emotional, you're trading way too much. So bumblebees is like, emotional about your trading. You're jumping in, you're jumping out because you're emotional. You're trying to pick a top in the markets. You're trying to call the crash, which, you're going to be wrong 80% of the time, maybe even 90% of the time. Why not flip it on the head and do the opposite and maybe you'll be right 80% of the time? Oh, what a quinky thing that is. Anyway, so yesterday I was screaming like, listen guys, we're getting a bit of a sell-off here. And I know there's a lot of people out there saying, oh my goodness, John, this thing is about to go through the floor. This is the top in the market. You don't understand. Someone even said to me, and this is the S&P 500, someone even said to me, John, you're an idiot. You don't know what you're talking about. You don't even realize we're in a bear market. I'm like, say what? If a chart starts, okay, for you guys, if any of you guys that said this, let's actually do this here, all right? Let's actually just look at the last 6 months here. Let's take everything off the screen, all right? Class is in session. Lesson number 1. If you see a chart, okay, so this thing's called a chart on the screen, okay? If you bring it into the markets, let me teach you a lesson here, okay? If you look at the market and you see a chart like this, and if the chart starts in the bottom left and ends in the top right, that's called an uptrend. They also call it a bull market, it's a market that's been going up. So class dismissed. There's lesson number 1. Come back tomorrow for lesson number 2. Someone called this a bear market. I'm like, oh, I couldn't even be bothered responding to that person. Like, anyway, so yesterday, guys, I was saying, traders, ladies and gentlemen, I was saying, ladies, gentlemen, boys and girls, this is a gift. So we may not be out of trouble yet because we're getting a lot of volatility here. So we may get a down day tomorrow and all that sort of stuff. But the point I'm making here, guys, is that yesterday I was saying, guys, I believe this is going to be short-lived. This is going to be short-lived. And I was saying to my private clients as well too, I was saying to them, listen, guys, I guarantee you that yesterday there was a lot of people selling out of the market because they're fearful of the market crashing. So they're quicker getting out now. And I guarantee there's a lot of people loading up on put options trying to pick the top in the markets. And today, both of those people are wrong. So one person is getting out now because they're freaking out because the market's going to go, oh my God, the market's going to crash. So they're freaking, they're just getting out, right? Because they're trading based on fear. The other person thinks the market's going to continue going down. So both of them have been wrong. What has been the right scenario? Buy the dip, sell the rip, buy the dip, sell the rip, buy the dip, sell the rip, right? And yesterday I was saying this is what? This is a good old GIFT, right? This was a gift because anyone that sees what's going on in the markets right now, I see this thing as being a gift, and I didn't know we're going to bottom out. I didn't know we're going to get a complete reversal yesterday, or it didn't surprise me, right? If you ever, there's always the yin and the yang in the markets. If you've been around if you've been around in the markets for a while, you'll notice this, right? You'll notice that the biggest down days are followed by the biggest up days. It's like, look at this here. Look at this big down bar here, right? We had The Dow Jones moved down almost 2% in one day on the Dow Jones. Oh my goodness, the top is in. Right? Big, almost 700 points on the downside. The very next day, look at this here. The very next 2 days, we retraced it and a lot more. Look what's happening here. And then we went sideways and then we did this, right? So the purpose of saying that, guys, is that the market's not always what it seems. And this is where, to be a successful trader and an investor in the markets, we need to be looking at it from the opposite perspective, because generally whenever we see the biggest moves in the markets, comes the biggest crashes. Whenever we see the biggest down days in the market, generally are followed by the biggest up days in the market. Actually, why didn't I code that? Why didn't I code that? Anyway, this is an idea. So we're looking at, that's the Dow Jones. Look at the S&P 500. You can see, look what happened here. We had a gap down. Look what happened today. Came straight back up. Not only did we reverse all of yesterday's candle, but we came right back up and closed the what? The gap. The gap has been closed right now. So right now we're getting this whole reversal here. And look at what's happening here, right? Look at this here. Absolutely beautiful, beautiful support line, okay? This is called a support line, what I just drew there. Just taking this off the screen. So we have a low, rallied up, lower high, or higher low, rallied up, came back down to where? The support line, and away we go again. And until we start to really break below, especially this lower here, the market's in an upward trend. Don't fight it, right? Just buy the dip, sell the rip, buy the dip, sell the rip. You know, could you imagine that, guys? Like, it's like, if you look at the markets, it's actually not that complicated. You know that 80% of the time when you buy the dip, when you buy the dip in a bull market, you're gonna be right, and 20% not. There's your 80% success rate. Anyway, so and now moving over to the S&P 500, guys, just so you know that I have a target of all the way up here at 5,000, and I believe we're going to be there by the end of this year. Oh, absolutely bollocks, John. Who do you think you're kidding, mate? We're in a bear market, can't you see? Sorry, guys, I got to. Anyway, back at the ultimately, guys. Ultimately, I see a 5,400 print in the S&P 500. So hold on to your horses, because we are about to gallop away. Not every day. When I say that, guys, let's actually put a break on. When I say gallop away, we may do this, right? Boom, 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 and then we have maybe a few day pullback, and boom, boom, boom. Right? That's how the markets work, okay, bumblebees? Some people say, "Oh, John, you got it wrong. The market went down today." It's like, guys, that's not how the markets work, okay? So just relax. It's okay. Now, looking at the Nasdaq, oh my goodness, the Nasdaq is setting up for one great, absolute monkey branching. All right, explosion. Look what's happening here. We were in what? We were in a bit of a channel / massive triangle pattern. Notice this look at this big, massive triangle pattern was in. And we just broke out to the upside, came back down. This is exactly what Amazon's doing, by the way, guys. So if you guys are looking for a position to maybe have a look at, or maybe someone wants to have a look at something, Amazon is looking exactly like Nasdaq. So this also applies to Nasdaq if you're looking at somewhere maybe to get in a position with good risk management, okay? No more than a few % risk on your account. So if we're looking at the Nasdaq, which I'm already in right now, I'm in the QQQs, which is pretty awesome because the QQQs have actually held up so much nicer after the breakout than the actual Nasdaq has. So go the QQQs, right? QQQs are holding up so much nicer. So anyway, but looking at the Nasdaq, look what's happened here, right? We have a pullback. Now we're finding support here, and now we're actually developing what? Just another higher low. So this is going to be a conservative. If you're looking for a conservative entry point in the markets, now this is what I'm about to say, guys, is a conservative, and there's no guarantees of this actually generating a profit. So if you do get into a position, make sure that you're trading real small and have no more than 2% risk on your account on any one position. All right, be smart. 2% risk, and hopefully you can get like a 10% profit out of it. I hope you see what I'm saying there. So anyway, if we start to break above 14,800 on the Nasdaq, then I see this is going to be the gallop move that the tech stocks are going to make, a move to the upside to 17,000. Get ready for it, guys. Get ready for the 17,000 print, because This is going to be on like Donkey Kong. Okay, that's right, Donkey Kong. Someone said in the comment section yesterday, why would you want to listen to Donkey Kong? Oh, it's on like Donkey Kong. Someone said a few weeks ago, John, you could take your Donkey Kong and shove it. Some people are just so impatient, guys. Sometimes these positions, sometimes the market takes a while for it to figure it out. And if you're after a short-term move, well, you must be trading a system. Don't blame me. If I say it's on like Donkey Kong, I believe gold's on like Donkey Kong. Talking about gold, let's have a look at gold, all right? This is gold here. Look what gold's doing right now. Gold is actually holding quite strongly here. Look at this. Look how strong. We had this big pullback down to this long-term support level. Now we're holding here. So we're in a bit of a mixed range here. So it's going to be really interesting to see, like, where does gold go? Because we could be in the precipice, in the starting makings of finally seeing gold get out of this funk that it's been in for the last, long time, right? Long time. And so if we do hold here and we continue up, this is now creating, or already has created, a higher low. So if we hold here with gold and we start to see something like this, breaking above 1900, firstly, if we do that, then we have this shoulder, head, and shoulder formation, massive head and shoulder formation in the markets. And we can see that once it breaks past 1900, the projected target is up at 2000. I believe that's the first stop. Then it's on. Then I have a 3000. Then I have a 3000 target, but the 3000 target is on a big, massive cup and handle pattern, which is the handle on the monthly charts. So therefore, I have a 3000 target based on that. So if we start to break here, this could be this trigger for it to start to see that move, which will take some time, and we will get pullbacks. I believe to then 3,000 in the markets through there. And also, guys, looking at the GDX as well too, and the GDXJ, we are continuing to see a bit more of a stronger selling move in the markets. Very, very nice downward trend. A lot more than, guys, I'm in the mining stocks myself. Now I have a 2025 view, so let's actually see what happens here. We are definitely building a bit of strength here in the markets when it comes to the I just lost my train of thought. The GDX and the GDXJ. So we are holding here quite strongly, guys, when we're actually looking this out here. So it's going to be interesting to see whether the bull run that I see from moving into August through the end of the year in the stock market. It's going to be really interesting to see whether we do get that inflation in the actual gold and mining stocks as well. Leave a comment below, guys, and put the words peanut butter in the chat box below if you made it this far, because if you did, then I want to say congratulations, you're part of the top 3% club. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go do that right now, guys. You can get full, complete, free membership access. Go do that right now.